So hi everyone, my name is Wisdom Jordan, and in this video we are continuing with our series about chart patterns, and in this video we are going to be looking at the triple top. So the triple top chart pattern looks exactly what you're seeing on the screen right here. Precedes an uptrend, okay, and then the price reaches and makes 3 levels of resistance which it fails to break. And then we confirm the pattern after breaking the level of support that has been created by the market, which is also known as the neckline. Okay, so that is what we call the triple top. It would look exactly something like this. Here we have a neck, we have the first level of resistance, a second level of resistance, and then a third one. That's why it is called the triple top. So below, where the market finds resistance, so down it finds what we call a support level. And after the break of this support level, we confirm that it is a triple top, and this support level is known as a neckline. So the triple top chart pattern occurs on a clear uptrend, and it signifies a bearish reversal. Therefore, a triple top is a bearish reversal pattern. So the triple top occurs in a clear uptrend. So for example, when the market is swinging high, for example, when the market is making series of higher highs and then higher lows, as we know the uptrend, because the market creates a level of resistance, that is one, and then a level of support. So higher high, higher low. So the market from the level of support, it swings to break the level of resistance, and then a broken resistance becomes a level of support. So here we have a resistance, it is going to be broken to become a support level. So the market swings, either it will break the structure of creating support and resistance. So for example, right here, you can find that the market, instead of coming to test at this level of resistance, it just closes far below from this level, it pierces through it. So which means that the structure has been broken. After the structure has been broken, the market creates a new level of support. So the market will go back and then test this level of resistance, which was created for the second time, and then it goes back, tests the level of support, which has been created, then it goes back, tests the level of resistance the third time, and when it comes down, it breaks through the level of support. When it breaks through the level of support, this level of support is also known as a neckline. So this neckline, when it is broken, we confirm that we have a triple top chart pattern. 1, 2, 3. So this pattern is confirmed after the price breaking through the previous level of support, which is also known as a neckline. So the tops should not necessarily have the same swing highs. So here what we are meaning, when the market creates these swing highs, you can see that the market is on a clear uptrend. It creates this first swing high, breaks the structure, creates a second swing high, which could be slightly higher than the first swing high, and then another one like this. So this is what we call the triple top, irrespective of the fact that this middle swing high is not at the same highs as these two. So this protrusion of this price is what we call the market fluctuations. So we just ignore that. So you could find something like this when all the points can be connected well, or you could find something like this and you connect with a slanting line, or you could also find something like this and then you have a neckline here, and then this one becomes the triple top chart pattern. So this pattern can be traded in 3 major ways. One is trading support and resistance, another one is trading the breakout strategy, and then another one is trading the break and retest strategy. So we are going to be looking at these strategies one by one. So we are starting off with a support and resistance strategy. So number one, here the market was coming from an uptrend. Okay, so here the market was coming from an uptrend, and we can see that it has 3 tops. that have been created. So this one is going to be considered a market fluctuation. So right here, this could be considered a market fluctuation. So we can see that here we have the first top, here we have the second top, and then here we have the third top. So in support and resistance, we trade what we expect the market to do. So we are knowing that the market, if it is on a clear uptrend, it will break the structure and then create the first top. After creating the first top, we know that the market is going to go up and test this level of resistance. So in knowing that the market is going to go and test this level of resistance, that is when we make our trade. So for example, if you have a market moving in this format, is on a clear uptrend, it creates a first high and then swings back, and then that is a confirmed first high. This is top one now. So we know that the market is coming back to create top two. So what we do is we wait for the market to find a support. So you can see that here the market is finding support. So we wait for a bullish candlestick pattern, and then we could be able to catch a wave up. After creating this second top, we know that the market is going to find resistance at this previous level of resistance. So we wait for a candlestick pattern, and then we take a reversal trade, okay, to this level of support. That is where the take profit is going to be. So after that, we also know that the market in the triple top chart pattern will go back to create a third top. So here we are going to wait for a candlestick pattern and then take a bullish trade. After creating this third top, we know that the market is supposed to come back and break this neckline to create a pattern. So we could take a short trade from here up to where the level of resistance is. So here, when the market is like this, here we make a buy trade. Market goes high, creates a second top. We take a short trade. After confirming the candlestick pattern, the market comes back to test on the support level. We take another buy trade from the support with a candlestick pattern confirmation, and then the market goes high, creates the third top. So we take a reversal trade for the market to come back to this level of support, which is the neckline. So here we expect two things. Number one, for the market, it can still go high and then come back to remain in the consolidation state, okay? Or if not that, the market will come and break through the neckline, which is right here. After breaking the neckline, it would come back to retest on the neckline later on, and then we continue in a downtrend, because we all know that a triple top chart pattern is a bearish reversal pattern. So for example, now when you look at the chart, you could see that here we have the first top formed. Okay, after the first top has been formed, we know that the market is going back to a level of to create a new high or a new top. So here you can see that we have a doji right here, and even this one is also a bullish pin bar. So we could make our buy trade around here, then we put our stop loss, and then we could be able to catch some profits upwards. So we know that the market is going to come back down, but you can see here that we don't have a clear bearish candlestick pattern. So we could leave this trade because we don't have a confirmation from the bears. So you can see that here we have a bullish engulfing right on the support level here. Here we have a bullish engulfing. So after this bullish engulfing, we could make a trade, a buy trade from here, and then we go back to this level of resistance. So on the level of resistance, you could still see that here we have a bearish engulfing. So we could make our short trade from here, then we put a stop loss, and then be able to catch the wave down. Okay, so that is how we trade. That is how we trade the triple top chart pattern. We trade it before it has been formed. We see that the market has been on a clear uptrend. It forms the first top, so we know that it is going back. If we know that, it means that here we are going to make a buy trade. So we make a buy trade, a market goes, it creates a second top, which could be as high as the previous top or slightly lower, like you can see here. It was slightly lower. So you wait for a candlestick pattern on this level of resistance. So after a candlestick pattern has been formed, you make a short trade to go back to this level of support. And then again, you make a buy trade and then a short trade. So here you wait for another trading strategy, which could be either the neckline breakout strategy or the break and retest of the neckline strategy. Okay. So the next strategy is the breakout strategy. In the breakout strategy, we wait for the market to clearly form the the triple top. So for example, you can see here that the market was coming from an uptrend. After this first top being formed, then it forms the second top, then it makes a third top, and then here it breaks the neckline, which is the level of support. So after breaking the neckline, what we wait for is for a candle that closes entirely before the neckline. So which candle here is this red candle? Okay. So when you see the neckline, you have to wait for a candle that closes entirely below the neckline. It doesn't matter whether it is a blue or a red candle. So here you could see that we have a red candle right here. So that means that we are going to take a short trade on the breakout. So this was not a breakout candle. So this is a breakout candle, this red candle. So we could put a short trade from here. And if the market is coming from around this level, that means that is where our take profit is going to be. Okay. So once again, if you are trading this triple top chart pattern for the breakout, you wait for the market to break the neckline. When it breaks the neckline, you have to make sure that the candle which has broken the neckline has entirely closed below the neckline. So that is when you take your short trade. So you could make a sell stop order from here, and then you put your stop loss at 1.5 of the ATR indicator. So after that, you wait for the price to move down. So the another thing I want to re-echo is that when the market is going to move in the direction to go downwards, is that the market will not move in a straight fashion. For example, here it's tried to move in a straight fashion, which is, so for example, you could see that it was making series of higher high and then higher low patterns. So that is how the downtrend is going to be moved. But majority of people wait for this parabolic move down, which does not happen. Okay. Or sometimes you could see that there is a break, but there will be a retest on the neckline, and then the market will keep moving down. So you have to factor in all those things when you're putting your stop loss. So another strategy is the break and retest strategy. On the break and retest strategy, we wait for the market. For example, here you can see that the market is coming from a clear uptrend. We are having series of higher highs and then higher low. So here the market forms its first top. It tests a level of support, makes another one. So you can see that we have three tops. Right here we have one, we have two, and then three. So what we do in break and retest, we wait for the market to break through the neckline. After the market has broken through the neckline, we don't make any trade. We wait for the market to come and retest. After the market has retested on the neckline, we wait for a candlestick pattern, and then we could be able to catch the wave down. So for example, right here you can see that the market has broken the neckline. So here we are waiting for a retest, and the retest happened right here. So you have to be patient until the retest is formed. And then you can see here that we have what we call a standard doji here, and this standard doji is confirmed with this bearish candle. So if you didn't watch my video about candlestick patterns, I recommend you go and watch it. You could see the entry rules. So right here, this is where our sell stop order was going to be, and then the stop loss, and then we wait for the market to swing down, and we could be able to catch the wave down. So you could see if this is a previous level of support, this is also a level of support. So this could be take profit 1, and this one could be take profit 2. So once again, to re-echo this, within the break and retest strategy, we wait for the market to form a triple top, and this triple top is only confirmed after the neckline break. This is our neckline right here. and this is our triple top. So we wait for the market to come and retest on the neckline, and then we wait to get a candlestick pattern, and then we could make a short trade. So that is it, and that is how we trade the triple top chart pattern. So in case of anything, you can comment. I'll be able to reply back. And thank you so much for watching this video. I'll see you in the next video. Do not forget to subscribe to the channel for more videos like this and for support. My name is Jordan. Bye bye.